And hello everybody, and welcome back to the latest video. This is Wes with Pikes Peak Trades, and we're looking here at the S&P daily chart. And anytime you're seeing this kind of cascading waterfall selling in price, you know that times are pretty tough in the stock market, and that's really how it's been since Thanksgiving. But I think I've got some really good stuff to share with you today. I want to talk about how I think price showed us something important today, looking at a couple important levels going forward. We'll show you a variety of individual names, even going to show you some in the metals and the crypto space. And so I want to just go ahead and jump right in. And I want to begin with a very popular count in trying to decipher this correction in the S&P is an expanded flat ABC here. And what I want to point out is potentially a rule violation with this C leg in comparison to the length of the A leg. You're going to notice that the 1.618 extension of leg C compared to leg A, price actually extended beyond it. And you typically, you don't want that to happen. Whether you're counting an expanded flat, whether you're counting a single zigzag or a double zigzag. So I do look at that as a fib rule violation, which causes doubt on this count. Okay, so I'm leaving it on there just right now for reference, but what I actually have made the adjustment that I think is a more valid count is that unlike the topping time with the QQQ, with NDX, the NASDAQ 100, with IWM on November 22nd, I've moved that top to actually to all-time high. And you'll remember on that date, the S&P and the Dow were the only ones that did make that high. So I think from that all-time high, we can now count a single zigzag correction, ABC down. And now I can give you the level that I think is extremely important. So keeping in mind what I just talked about with the C leg fib extension, if the S&P moves beneath this price right here, 43.66, if it goes beneath that, I think we have to look in doubt on this count that we could have an imminent correction complete of this degree. And instead, I think we would have to start entertaining a very, very bearish correction count that would be of a primary degree. So I give you this level here right off the bat in this video, 43.66, as an invalidation level for this ABC count as labeled. Okay, now let me just go ahead and show you the weekly and then the short term so we can kind of stack everything together here on the SPX. So if I get you into the weekly, and I want to get you into here, you're going to notice that we did close the week at some significant support. So right on the bottom of this bullish channel that's been valid since November of 2020. So a 1, 3, a 2, and a 4, and that's why I've made this degree update just above here, the 50-week SMA, which is at 43.49 on this week's close. So we are really at a crucial level, and you're going to kind of see that throughout most of the charts that I show you. Okay, now let me get into the short term, because we can use the short term here to try to talk about, do we have a valid completed zigzag? So looking at the ABC correction, I think price today on the opening bounce gave us the potential wave 4 that we needed to finish when price fell into the close. So I think there is a valid 5-wave leg down to finish C of 4. 1, 2, 3, 4, and 5. So I will give the possibility that there is a chance that we have bottomed. Okay, but I want to point out this. So let me now take you to something I've shown often in my videos, a stack chart of the NYAD, okay, sorry, which is tracking here NYMO, the McClellan oscillator, with the VIX and its Bollinger Bands and the S&P. Okay, and you're going to notice that we've had 1, 2, 3 consecutive daily closes beneath it, and that is a rare condition. It's really only happened in some significant sell-offs in August of 2015 recently, and then in December of 2018. It did not happen during the COVID correction of March 2020. So this is significant selling. You'll notice the close here quite a ways beneath the 200-day SMA, and I could only give you more confidence in a stock market bottom if the S&P closes back within that lower Bollinger Band. So we've got to see, and this band is going to drop as price continues Monday and Tuesday, but we've got to see the S&P get back into the upper 4400s. So it's got to get back close to 4,500 to even be able to have a chance to try to stave off some of the massive selling that has occurred. And along with that, we've got to see that VIX get back within its upper Bollinger Band. So I give you the possibility here on some counts that the low is in, but yet there is significant technical damage. And obviously, this trend of lower highs, lower lows has to stop. Okay, so I also want to provide to you that alternative that would allow the S&P to go down a little bit more after a bounce. And that would be if we've just put in a degree 3 and we're now waiting for a wave 4 bounce, a weak bounce, could be a single zigzag, could even be a triangle, as that would offer pretty wimpy resistance against the downtrend, giving you a couple levels that if we see another move up and a fail and a short attempt, but there's that number again, if we are below that level, if there's a big gap down on Monday, or if there's a weak bounce attempt and we sell off, as we've done for the majority of the last 2 weeks, then we've got to be looking to a bearish red count. And that bearish red count would just be having this as the start of a fresh 5-wave down into an ABC to some pretty painful targets. And because of the significance of the selling that we're seeing, we have to keep that count on the table. Okay, now that count is a little more visually evident in the Qs. So in the Qs, let me move into its daily chart to show you an update. Now, I had originally been counting on the Qs a double zigzag correction, so an ABC down to a W to an X wave, and then looking for an ABC down into that bottom. However, it also has the same 1.618 extension violation, and wave Y should not extend more than 1.618 of my proposed original wave W, which was ending right here on December 20th. Okay, when that happens and you're trying to chart a correction, probability suggests you need to start considering the possibility that this is actually a 1, 2, 3 down. And whether or not that 3 is complete is just like the short term in SPX. Are we able to say with confidence that the short term wave count here is complete? I think there is a chance that we could have that wave 3 in. So we would be looking here at an X wave top on January 12th, but then you've got to get an ABC out of that. So you've got to get 5 waves into an A, up to a corrective B, and then 5 waves into the final C. And as I shared on SPX, I think that was what was important about today's brief oversold bounce, in both Qs and the S&P is it did allow the possibility of completed counts on the short term. Okay, now just like the S&P, if we see a weak bounce that gets rejected, I'm going to have to consider, just because of how extended the Qs are, that we are actually in that bearish count. Okay, now for a full invalidation of any bull count, it's actually necessary for us to go into the NASDAQ 100. So the way that this is counting by degree is I have the February 2021 top as an intermediate 1, wave 4 within a higher degree 3 cannot trade into the level of wave 1. So we have another clear invalidation level. If price goes below 13,879 on the NASDAQ 100, I believe that we are looking more likely at price correcting everything since March 2020. We have actually already moved here into an appropriate fib range for this intermediate 4. But you're going to notice, unlike the S&P, there is a significant channel loss here on the NDX. So warning shots are fired. We absolutely have to be considering here the possibility that things are going to get much worse. And I simply offer some of those paths that I think right now are probable. Let me go ahead and get into the weekly on that NDX. There we go. And one concern that I do have about that count is we've already got that wave 4 at a 0.5 fib of the move from 2 to 3. And general guidelines for fib retracements of wave 4s say when it goes past 50%, the probability that it's correct is reduced. Okay, so I'm offering here a set of evidence that is enough for us to have some pretty significant concern. Really what needs to happen is a bullish stick save next week. That is what absolutely has to happen. We have to see bulls come back in control. Otherwise, we put some of these pretty nasty correction counts on the table. Now, let me jump around just a little bit more here. And I don't have this color updated, but I kind of want to show you what happens during really significant bearish reversals. Is you're going to see on the higher time frame charts, price just start slicing through its MAs. And that's exactly what we see this month of January, slicing through the 8, slicing through and actually closing right on the 13. That's exactly what happened in October of 2018. When that slicing began, that's what triggered an even deeper sell-off. Now notice something else that's significant in its potential is a monthly MACD bear cross. So this has actually already happened on IWM. And if this confirms by the end of the month, we've got another piece of evidence that's going to say, I think we're due for a lot more pain. So the next 5 to 6 trading days are absolutely crucial. But you know what? We using the rules and guidelines of Elliott Wave and using some technical indicators as support, we're going to know. We're not going to be surprised. The market is going to tell us. It's already giving us a great amount of information as of this weekly close. Okay, do want to take you through some others before we get into individual names, and want to show here ARKK. So we're looking at price that has just moved down here on the month, right at the 50-month SMA. And it is now within correction territory of a cycle degree. And on many, many individual charts within the growth space, they absolutely are in significant corrections. Most of their all-time price moves I'll show you shop here in just a little bit. And we had a clue. Here is that monthly MACD that I just talked about on the Qs. We had our clue back in September. In the close of September, that MACD crossed. And although we had one more stabbing attempt to get price back above that monthly high, once we sliced through these monthly EMAs, it was game over for this ETF. And that is the warning that we have right now in big tech. So the damage is already done in growth stocks, and in small caps are starting to show this kind of danger. But when the generals start to get shot, that's when the market really can really fall. So crucial level to see if this MA will even hold. And, maybe it will. And in that case, it is possible that we have a completed correction here of a double zigzag. We're going to need to see next week price reclaim with some enthusiasm that 200-week SMA, okay, which is right at about 73 and some change. So the daily count does show the potential of a fully completed double zigzag. So with the last here of an ABC down, and then we're looking to see, do we get 5 legs down for that C leg, just like what I wanted to show in the S&P and the Qs. And if I take you into that short term, so we're going to be able to see 1, 2, 3, 4, and 5. Okay, so just right at the end, getting that stabbing lower low that would complete that degree 4 within this last leg. So there is a chance that we've got all of the Elliott wave counts in place. Let's get to small caps. So IWM, and that's actually what I want to talk about last, the short term here on the monthly. Okay, I have circled and then shown with the vertical line the previous 5 times that we've had that monthly MACD cross. So we had it during the great financial crisis. We had it, but then price briefly recovered in the fall of 2011, and it recovered the next month with an outside bullish engulfing candle. So if we want to try to see small caps reclaim the possibility of a new all-time high count, we need to see a candle like this. Man, you think about that as a day and you think impossible, but that's out there. Here it is in August of 2014, and you saw that price made a divergent high but then stabbed lower. That possibility exists. And we see what happened here in 2018 when the first triggering move just led to a nasty correction that lasted for a year and a half. Okay, so the evidence that I'm showing, it should raise your antennae here. The caution signals are flashing that we really need to be on guard for how this month closes. Want you to take a look. I'd already showed those stabbing moves through EMAs, and look at what IWM has done this month. It stabbed through the 8, the 13, and now the 21. That is the kind of price action that happens at big corrections. Okay, so we need to see a monthly rebound and get price back up at least above that 21-month EMA, and it would be better to reclaim that lost range, which is about 206, 207. Okay, on the weekly, I'm showing you that developing bear count just like QQQ. So that count as an ABC, just like what I just showed on QQQ, would have this move in a 3 of C down, which is impulsive to the downside. You can think of the strongest trending move here. This was a 3 of 3 to the upside. So now you just flip the chart over and we could be within a 3 of 3 to the downside. So as we kind of drill down into where we're at, we had that rejection on January 12th where price tried to stab back into these downsloping EMAs and was just rapidly rejected. And that is absolutely behavior that is consistent with a wave 3 down. Okay, now, just like the others I've shown, is it possible that we've got a low? It is possible. I do want to indicate we do have daily RSI divergence that's almost 2 months in duration. And we have 1, 2, 3, 4 consecutive closes outside of the lower Bollinger Band. That is nearly unheard of. And on the short term, I think we do have, at the end of the day, we have a potential finished wave count that could at the least give us a wave 4 bounce. And in the best possible scenario, with a strong move next week, finishing the month could help seal that low. Okay, so we have a lot to look at. We've got a lot to think about. I do think the probabilities and counts suggest a bounce on Monday, but whether or not that just gets sold lower towards some of those lower fibs or it holds in a higher low too, that is the kind of Elliott wave pattern that has not happened. We have not seen a move up and a higher low that is actually held. And that's going to be step one. Okay, do you want to go ahead and show you the Dow? And the Dow also, I think, in a significant degree correction. Its count would look like an expanded flat that I did mention, I think, is now violated in the S&P, but it is still valid in the Dow. And I want to point out crucial long-term support in the Dow. We're talking about a decades-long trend line here that it has been flirting with, and it's now in danger of losing. And if it loses it, I think we got to kick up the degree into the next degree correction, and I've got a target below 33,000 if that's the way that it plays out on the Dow. Okay, now some individual names, and I really do think it's important at junctures like this to make sure that you are looking at individual names, and I want to show you one that is actually giving me a little bit of hope. I'm hesitating on where are we at on the correct chart. Sorry for the delay. I want to show you Apple. Okay, so let's actually start with the weekly chart, and you're going to see when I contrast Apple with something like Amazon, you're going to see the difference in technical health. You're going to notice in Apple the bullish alignment of EMAs. So 50, 34, 21, and this here is the 8. Take a look at something that's really beat up like Amazon. You have these MAs all already crossing over. Okay, so Amazon here is a stock that I would put on the do not touch list. And I want to kind of make this point for active trading is it is much more probable if we are actually setting some lows that you trade stocks that still have a bullish count intact. The bullish technicals are still there. And Apple is the one that immediately jumps out at me. So I think Apple's still holding above here the 21 EMA at a potential wave 4 fib that matches the degree of the correction from that ended in March of 2021. And I am optimistic that we get one more move up. So just like I've showed in the indices, I think Apple is a good example of how that could take place. So I show you those fibs. Now, is it concerning that it's lost the 50-day SMA? Absolutely. But let's get more concerned if next week's candle starts slicing through more of those moving averages. That's when we know that we're in a trend that's really worrisome. And just like the others on the short term, I think Apple traced out a pretty nice ABC zigzag pattern. And this is one of the more cleanly counting ones with a clear 1, 2, 3, 4, 5 to an A, a 3-wave move to a B, and it's a little bit of a chore, but you can get it 1, 2, 3, 4, and 5 down on divergence that's lasting here about 2 weeks. So I am optimistic that a name like Apple is potentially giving us a signal that we could actually here be finding a bottom. Okay, now talked about Amazon and don't want to ignore it, but Amazon was just crushed this week, down 12%, and it has already moved into a potential primary degree correction area. So Amazon is broken right now. If I take you into here, into the monthly, you're seeing that monthly slice of EMAs. And if it goes one more, so if it goes below the 34, if it trades below 2,800, then I think we really could be looking at something really nasty, potentially down to the low 2000s on Amazon. So just another key stock at a key level. As far as the details of its count, I haven't put them on, but I've just shown that this does look like an ABC, whatever degree it is. There isn't any daily divergence yet, which is concerning, that maybe we need a weak bounce and more selling. Okay, so this is one I'm absolutely going to watch, but absolutely not going to touch. Okay, a few more on here that I do want to show. And we'll just go through Google, Microsoft, Tesla here. I want to show you the Google monthly. Okay, so Google on its monthly chart as of now is doing something that it hasn't done since the COVID correction, and that is to trade beneath its 8-month EMA. It spiked it in September 2020 and immediately recovered. And then the next month, strong green candle sent it on a primary 3. That needs to happen again. If Google loses this 8-month EMA over the next 6 trading days, then I think we've got to be looking much lower. And that's going to correspond to one of the more bearish versions of the S&P and Q charts that I showed. So another crucial stock to the indices that has some technical damage. Its weekly is right on the 50 SMA. So I just feel like I keep showing this over and over. Critical support, crucial support. It's right on support. And if it goes much lower and closes the next week lower with that monthly EMA, I think we're looking at a stock that's telling us and signaling to us that the market is in trouble. Okay, but just like the others, it does have a valid completed count. You're going to see this pattern is exactly like what I have in Microsoft. And it is possible we get a strong recovery and we've set that low. Okay, now, do want to show you Microsoft. So Microsoft here on the weekly, it's comfortably within some degree 4 fibs. This is the same degree that I have QQQ. And I mean, could it work lower? Sure, could hop all the way down to the 50-week SMA like Google did. On its daily chart, right above the rising 200. So there's support. I think if we do take a stab down, then I think this support will help catch Microsoft. That's just above 292, and that's maybe going to coincide with an earnings bump. Okay, so we have a massive week of earnings. I hadn't mentioned this yet, but you've got Microsoft here on Tuesday. You've got Tesla. Tesla reports on Wednesday. You've got Apple that reports on Thursday, and they keep stacking up in the big tech world. So crucial week. Now I don't like adding stock or playing options unless it's a small amount where my risk is defined ahead of an earnings report. Just look at what happened with Netflix. Now, there were traders out there that caught it short, made multi-thousands. That's awesome, but that's not for me. That's just not for me. I would gladly trade a reaction knowing that if these earnings reactions are bullish, look at how much meat is left on the bone to a finishing target. And if the reactions are bearish, boom, that's the catalyst that's going to be there for the next nasty leg down. Okay, almost done here. We're looking at Tesla. Let's get to the weekly chart first. And on the weekly, I talked about dangerous stabbing moves through EMAs, and it sliced through 3 this week, down 10%. It sliced through the same EMA, the 21, when it made its low week of Christmas, but it immediately recovered. And we've got to see an immediate recovery next week. Otherwise, I've got Tesla in a cycle correction that could be quite painful, putting it right back into its breakout range before it broke out strongly in October of last year. On the daily, I do want to point out that although this gap filled in October, the gap from December 22nd actually did not fill by only about $1. So it actually did fill that gap post-market, post-close, but I only use cash market hours. So I think it's very likely that we at least see Tesla with the stab to close that gap, possibly seal a low above this wave 4 before we can get a move. And then that move again might correspond to its earnings here on Wednesday of next week. Okay, some others that I do think are interesting, and then I'll kind of finish it. Actually, let me go ahead and move now into gold. Okay, and I want to show you GLD and SLV because of the potential of another failed breakout. So you're going to notice here on GLD back in June of last year, an upper line hit and a massive sell-off. A fake breakout, and a massive sell-off. And I'm concerned it just did it again. Okay, so this kind of reaction also in metals and miners would correspond with those very bearish counts that you see. I think we've got to see, I know it may seem counterintuitive, but we've got to see everything move up. It's got to be a joint effort. We've got to see gold and miners not have a fake breakout, just like what you would see here in SLV. Is this a year-long diagonal and a fake break? Those can be very, very bearish. So I am on guard here. I did also want to point out, I had posted what I thought were bullish charts on both AG and GDXJ, but just take a look at what GDX did, and this is not good. So I had it in a nested 1-2, 1-2, 1-2. And within the wave 3, any wave 4 cannot trade within the potential wave 1. So that to me, along with what looks like another failed breakout, I really didn't want to see that happen today. Wanted to see some relative strength in this sector. So I think we're back to a questionable Elliott wave count. Certainly a tenuous position here, far, far from certain that we're going to get resolution to the upside in metals and miners. Okay, last couple individual charts that really just names that I'm trying to focus my list. Nvidia is one. This is an intriguing daily candle. Very intrigued here by the potential that this is an inverted hammer within a wave 4 fib area, potentially with a completed short-term count. Okay, but like I've been showing on weekly charts, significant damage. This looks a lot like Google, just slicing through these weekly MAs. Must see a recovery next week. Continued movement down, and we're looking for the lower channel, and we're looking possibly at about $200. Okay, last one, at least within what I'm interested in, is SHOP. And I want to show this just as an example of what has happened within the growth darling space into a fib level of a cycle degree, matching what you saw on ARKK, and with just technicals that really are just pretty rotten. So my point here is although we might get a bounce, we are far from a high probability trading environment on any of these names like Shop. I could put Twilio in there, Roku in there, Zoom, TDoc. The list could go on and on and on. If you are seeking to actively trade in this environment, unless you're really great at just timing bounces, stick to the names that still have some healthy technicals. I showed you Apple. Tesla's still relatively healthy. Or just trade the indices. So we are still far from resolution that we're even going to get a recovery. And if we do, think about how much is still left. So this is a time really, I think, to be very judicious about any money that you put out into the market. Small sizes, less positions, only premium opportunities. Many have found success in shorting the rips, which we may see happen again next week. Okay. Last thing I want to leave is I do want to show Bitcoin and want to show the potential. Is there actually potential along with the stock market that we could have at least a tradable low in Bitcoin? And I'm watching very, very carefully this weekend. So I'm wondering if we've got kind of an extended fifth here, 2, 3, 4, 5, into a tradable area, at least for a bounce. So look to crypto this weekend. It's been trading in tandem so well with stocks. I think if we see some strength up through Sunday in crypto, then maybe we can get an opening bounce and maybe a lot more to start the week. Okay, so hope you enjoyed what I shared. Lots and lots of stuff for us to think about. Just want to take you back to end here with the S&P daily chart. Remind you of that level. There it is. That is the level in my mind that's going to help separate the potential for more bearishness to come, possibly a 1, 2, 3 impulse down from the potential chance that we have to make a bottom. So crucial week to end the month of January. And let's see what happens. Going to do my best to try to alert you throughout the week. And as I mentioned, stay safe, stay sane. Make sure you're taking care of yourselves. Try to stay positive. And I do think we're going to be able to get through it. But it's going to be a really, really crucial week coming up here to finish the last full week of January.